New mortgage rules coming out January 1st will dramatically impact your purchasing power when it comes to buying a home. Canadian home buyers will need to meet stiffer guidelines in order to qualify for a mortgage. Kim Vucurevich is a mortgage specialist here in Lethbridge. Welcome to Bridge City News, Kim.
Thank you for having me.
Oh, you're welcome. Now, Canada's banking watchdog, the Office of the Superintendent of Financial Institutions Canada, says all borrowers, even those with down payments of 20% or lower and do not require mortgage insurance, will need to qualify for mortgages 2 points higher. So now tell me something, why were these rules really imposed? Are they to protect me as a home buyer?
Yes, they are, and it's to help to, if it's to also prevent a customer from going over their spending limit, because you have to take into consideration that they also have other debts too, and they're kind of maybe, thinking that the rates will probably go up too, further into the year.
Right.
So they want to keep things, kind of on a level where you have some room there to adjust on your payments. And in case of, emergencies or situations come up. And so it gives you a little bit more flexibility instead of being, basically maxed out.
Right. House rich, cash poor, as we've heard many times before, right?
That's right. A lot of people buy homes and they buy right up to the limit that they can afford, and then they're sitting there home poor with,
a beanbag chair, a lava lamp,
That's
and
right.
Some Snickers bars, and that's about it, right?
Yes.
Although that doesn't sound too bad sometimes. Now, let's talk about the difference between A, B, and monoline lenders. Can you explain how that works?
Okay, well, actually A lenders are usually larger banks and bigger institutions, and they usually want clients that have stronger credit. And B lenders will take clients with a weaker credit, and monoline lenders basically will take A or B clients. They deal strictly in mortgages only. So,
Okay.
So basically there's the different levels for people with different
Credit scores, right?
credit scores, yeah.
So what's a really good credit score to qualify for mortgage right away? Like 750 and above?
Oh
perhaps?
yeah, for sure.
That's fine?
Yeah.
What's kind of like that, I might have to do a little investigative research, and like maybe 650, can somebody still qualify?
650 and under would be more like a B client, or like for the B lenders. So yeah, like they're becoming more strict with the credit score limits. So they usually want about 650 and up now. Before it used to be 620, but now they want like at least 650 or higher for the real, the A clients. But B clients will, or B lenders will take, around 600 to 650.
Now, I know a lot of people as well that, when our economy went into the tank and their credit was impacted, some people had to file a consumer proposal, some personal bankruptcy, and then it's like rebuilding the credit. So you have to pay your bills on time, then you have to get a secured credit card. So it takes a while to actually rebuild your credit, doesn't it?
Yes, it does. Yeah.
It certainly does. So
and that's actually when private lenders would come into play if they have to do a refinance. That's when you start using private lenders that will help out with people with lower credit scores or bankruptcies, or sometimes breakdown in the marriage or loss of job. That's when I've gone in and had to use private lenders for situations like that.
So Kim, the changes which are taking effect in January of 2018, are we seeing a big impact when it comes to refinancing and switches as well? with mortgages?
I'm getting a lot of younger families that are calling me and asking about refinancing. Because I think they're kind of worried that the rates are going to go up and they're not sure if they're going to requalify. And if that's the situation, then that's where a lot of my B lenders will probably come into play, or credit unions, because they don't follow the same guidelines. They have their own provincial guidelines, opposed to federal. So, but that being said, credit unions still going to have their own, they'll have their rules too, so enforced.
So 5-year closed mortgages, can I still get something under 3%?
Yeah, actually you
can.
can.
Okay.
Yeah.
Okay, that's good. My mother actually, it's funny because she refinanced she got a 10-year.
Wow.
A 10-year, and I think it was around 5% she had to pay for a 10-year.
She came and talked to me.
She should have talked to you, right? That's right.
Yeah.
Now tell me something, do the new rules coming in January 1st, do they apply on 1, 7, and 10-year terms then?
It actually applies on all the terms.
Oh.
So there is no specialty, if you do a 1-year term, you still have to take that stress test.
Yeah, the stress test,
Yes.
okay.
So
how about on open mortgages, like 3-year, maybe a variable, or?
You'd still have to, even variables, they always actually did, it wasn't called a stress test, but they would pick some kind of fixed rate that the lender felt that was comfortable for them, that you can, if the rate ever went up, that you could support that rate. So they always kind of had that rule of, of a higher interest rate. So, so variables, same thing. It doesn't matter what kind of mortgage you're getting. If you're refinancing, purchasing, building, whatever, you still have to do the stress tests.
Now, a new recent study by the Fraser Institute says the new rules coming in effect will do more harm than good. Now, what are your thoughts on that?
Well, I actually think it will protect a lot of younger families that are just starting out, because there's nothing worse to, purchase a home and then all of a sudden, we can't make ends meet. And then they have to, look for something else or pack up and move somewhere else and try to buy a house or refinance again. So I guess basically, I think it's actually good that they're doing this, because it will put people in their financial level where they need to be.
So somebody, let's say, made $80,000 a year as an annual salary, and they could afford a $500,000 mortgage. Now all of a sudden that's dropped almost $100,000 with the new rates coming in.
Yeah.
So it takes away, 20% of my purchasing power. So
yes, it does.
Some people are not going to be too happy about that, right?
No. Well, and some people were, they're going to find that, well, I was, pre-qualified for a $500,000 home, and now after January 1st, I only qualify for a $400,000 home. So, it does take away the purchasing, or 20% of the purchasing power.
So if you're pre-qualified before January, then the rules come into effect. Can you still grandfather it back to what you were originally promised before the rules?
The lenders haven't decided on that yet, so it's kind of still in the air about that. Because sometimes, there are rates, or you get approved and the file it's all set and done, and it's just waiting for the closing date. So I don't think they're going to say, well, you have to requalify again.
Right.
Because I think that would cause a lot of problems, right?
That would, definitely. So tell me something, what are the advantages of using a mortgage broker as opposed to a traditional bank, like going to an A-lender, bank myself?
Well, being a broker myself, I have over 20-something lenders that I can work with to get a mortgage that best suits your needs. And I have lots of different, I have a lot of choices for you, opposed to the bank. The bank only has one product to offer, which is either, a fix or a variable, and it's their rules and whatnot. So sometimes you have to kind of, go to a mono lender type of lender and maybe use one of their products that just specializes in mortgages, and they're not there to try to get you to, open up a bank account and all that stuff. And a lot of times those kind of lenders too have the discount rates, which are really nice. Usually 99% I can beat the bank rates, which is really nice, and a lot of people don't realize that. Mm-hmm. I've had some customers where they've gone to their bank and got their rate, and then they come to me and it's the same bank, and I actually got them a lower rate from their own bank.
How are you able to do that?
Well, I'm a mortgage broker. That's my job.
That's right, exactly.
So we do have discount rates, and that's why it's kind of nice to use a mortgage broker. And I can do the shopping around for you and, shop a bunch of different lenders. And your credit bureau only gets pulled once, so it's not like, because if you go shopping, it gets pulled every time.
Does that impact my credit score
yes,
every time
it
gets pulled? Oh.
So if you started at Bank A, and then by the time you got down to Bank D, and then the rates get higher as it goes. So then by the time you come back to Bank A, they're like, I'm like, well, I want that 5-year fix for that rate you told me. And then they pull your credit bureau again, and then they say, well, I'm sorry, sir, but your credit score has dropped quite a bit now. So now they'll offer you a higher rate, actually, opposed to the lower one that they first, told you about.
So Kim, I'm wondering, with the new rules coming into effect again in January 2018, is that more for maybe people in the larger markets like Toronto and Vancouver, so they don't really get stressed out too much with their mortgages, being, house rich and cash poor?
Yes, they're trying to kind of keep the market more affordable and keep it lower. Because from what my understanding, most of the houses, they're like $1 million houses, right? And
yeah, the average house price in Toronto was like 1.25.
Yeah.
Vancouver's 1.5, right?
Yeah, it's.
Lethbridge not quite that high yet.
No.
Fortunately, it's a lot more affordable here, which we appreciate, right?
Absolutely. I mean, you can buy some really nice houses for $300,000, $400,000, no problem. Even $250,000,
That's a down payment on a condo in Toronto or Vancouver.
Wow.
Yeah. That's it. That's all that is.
Yeah, so they're trying to kind of protect the consumer and and try to, you know, help people basically budget more, because I think people are more in the now moment where I want everything now, and then they get into a situation where, you know, they need their mom and dad to come and help them, or, you know, I see that a lot too with young families, and sometimes you can't always rely on your parents, you know.
Mortgage specialist Kim Vucurevich, thanks so much for joining us here on Bridge City News today.
Thank you so much.